You're watching a Stock Watcher this week. I'm Zinati Goma, and joining me to unpack your stock-related questions today is Chantal Marx from FNB Wealth and Investments and Thamsanqa Netha from Shiloh Capital. Be sure to send your questions through via email at stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. So if you are watching, we are live, so do send your questions. Thank you so much, lady and gent. There is so much that is happening. If I could, I would extend Stockwatch by an hour. But let's not do that for today. It is a Friday after all. Chantal, starting with you. There's a lot that's happening. We've got... Okay, let's start off with China and China-exposed stocks. Considering the trade data that we got today, is there worry in the market in terms of luxury stocks, Naspers, Process, the lot?
Well, there does seem to be some worry around the luxury stocks as well as the tech stocks. I think we've had a really strong run of late. A lot of that, particularly in the tech space, premise on the fact that the expectation is that China can really start scaling their investment, but at a lower extent and more bang for their buck than the US in AI.
Okay.
So I think that there's just a little bit of concern creeping in that the fundamentals of the Chinese economy remain under a little bit of strain. But I wouldn't be too worried about it. I think that one data point does not a trend make. And there is quite a bit of excitement around the DeepSeek story and how AI in China has gotten this leg up after that development, and they're not as dependent on US technology to actually drive the adoption of AI and the solutions of AI into their broader businesses.
Yeah, talking about DeepSeek, China needs to seek deep to eke out economic growth. Tell me, is there any nervousness on your side in terms of what we see? I mean, today we saw luxury stocks feeling pressure. We saw Naspers and Process as much as we'd seen a few sessions of those stocks being in an upward trend. Is there no nervousness, no jitters coming from your side?
Not at all. I think this is a consequence of U.S. trade policy and how the globe now views the United States, and how the United States now view the globe. I think the market data will always indicate some movement. It's a very big country. It's 3 times the size of America, so in population-wise. So it's a very large elephant to move. So 1%, 2% movement in China is a significant thing. And secondly, I think markets will always react a particular way given the policy initiatives of the government at hand. If, as Donald Trump continues to intimate that they are pro the U.S., investors in companies which are Chinese-based but listed in the U.S. might not get as much attention as asset managers don't want to catch the negative eye of Doge. So I think it's more a case of portfolio corrections rather than necessarily negative data.
Well, talking about Chinese tech stocks, there's a question on Alibaba. Please give me your view on that. And there's maybe a little bit of a narrative of people maybe trying to move away from the frothy US tech stocks to China that have got a lot of value embedded in them. So Alibaba, Chantal?
Yes, I mean, Alibaba is a stock that I really liked and I've liked it for a long time. And I've been really depressed about it for a long time as well, up until about 6 months ago when we started seeing a really nice re-rating in Chinese equity. But the stock still is trading at multiples way below the likes of an Amazon, for example, which would be a close peer or close comparison from a US perspective. So I definitely think there's still a lot of value there. I think the fact that they now have the ability to embed DeepSeek and AI technology into their processes will result in efficiency gains, and it will also result in a massive improvement in their cloud business because external demand could come through. Now, one of the other reasons I like Alibaba is because they've changed their structure. So they used to just report as one big lump, and kind of just mention what the different businesses are doing. But around about a year and a half ago, they actually made the decision to report on 6 distinct divisions.
Yeah.
So it just makes it a lot easier to see what's going on in the business and to value it separately. And it opens up the opportunity for them to either sell some of those businesses, scale others, or potentially unbundle those businesses to shareholders. And I think that that could be greatly value enhancing.
On your side, Tammy, Alibaba?
I think on top of everything that Chantal said, I think what's also important is the government is now backing it again. So the Chinese government has decided they're going to step up and back them again, and that's always a good signal for any company that's looking to do what Alibaba's doing. They have got tremendous amounts of data, so their partnership with DeepSeek will be very, very meaningful.
All right. Well, let us go into PGMs because those have been in the spotlight this week as well. Let me get to that. What is the estimated cost of PGMs in one car? Hey, but I feel like this is way too technical. What is estimated cost of PGMs in one car exhaust, and could Russia be selling cheap to China to fund the war and thus depressing the prices by reducing demand on the open market? I feel like that's maybe a question as to the role of PGMs at this point, and also really what's driving up the prices so much. Chantal?
Yeah, so I think that I don't know the exact specifications as you said. I don't know the exact specifications, but I do know that the PGM loadings have been increasing over time in internal combustion engines. And the main reason for that is that environmental legislation has become more onerous. So that requires higher PGM loadings in a catalytic converter. What's also helped more recently is that we've seen a preference towards hybrid vehicles over pure EV vehicles coming through from consumers. And hybrid vehicles also have very high platinum loadings, or PGM loadings, should I rather say. In terms of what's driving the price, there has been a deficit in the PGM market for probably around about 18 months. One of the uncertainties surrounding PGMs is that there are massive above ground stockpiles that we can't really quantify by that much. But we've started seeing these companies saying that they are seeing early signs that they are that kind of the inventory stockpiles at the automotive producers are actually coming down. So that tells us that this deficit is probably increasing, or now it's slipping into a deficit if we were wrong about above ground stocks. In terms of the conspiracy theories, I don't know what happens in between China and Russia, and I don't actually want to know. So maybe, I don't know. I hope not.
Yeah, but I mean, what's interesting, I mean, obviously the viewer was talking about the depressed prices, but the depressed prices, the price is not so depressed anymore, as we have seen this week. But Tammy, is there a correlation between the actual prices of the commodities and the share prices of the miners that we have seen this week?
There's some correlation. There'll always be some correlation, but the miners unfortunately don't get to determine the price of the product they sell. So they are in reality in cost management. They're trying to extract the mineral from the ground in the most efficient and effective way. The pricing is a geopolitical matter. I think there's a lot to do with China demand and Russia demand there, a lot of which we don't know. But China's doing a lot in the car and vehicle manufacturing space of late. And I think there is quite a different view of the world in terms of the demand of PGMs. And I also think battery-based metals also fall into that space. But largely, like Chantal said, I think it's a geopolitical issue. And the B and the C of BRICS, I think, must remain as far apart as possible so that we can avoid any sort of a huge geopolitical issue.
There's a question that's asking, did Sibanye declare a dividend this year on their year-end results? No, they did not. They skipped it. But of course, as expected, because of the commodity cycle that they are in now. Just your thoughts on Sibanye-Stillwater, Chantal. And actually, I think it has participated in the surge in the PGM stocks that we saw this week. Your take on Sibanye at this point, Chantal?
Yeah, I'll just start by saying I'm so glad they did not declare a dividend because their balance sheet is not in the best position and free cash flow has also been under pressure. So Sibanye is going to do well and probably better than the rest of the PGM producers should we see a sustainable increase in PGM prices. That is because it's highly leveraged from a balance sheet perspective, and also it's highly operationally leveraged because their cost to produce is higher. So it makes a huge difference for Sibanye when PGM prices increase. They should, in theory, benefit from higher gold prices as well, but they've actually had operational issues at their gold mines that have resulted in gold production being lower than expected and gold production costs being higher than expected. So that's reduced the positive impact on them. Then the third thing with Sibanye Gold is they are really trying to focus on future-facing metals. So they're investing a lot of money in developing new avenues of growth in zinc and nickel and a bunch of other things, and that is also costing them money. So Sibanye is a high risk investment, but I like the fact that they're future focused. I'm a little bit too much of a scaredy cat when it comes to these kinds of companies to invest, but if your risk profile is let's do this, then it could be the stock for you.
It's interesting that you mentioned their focus in the commodities of the future, but then, of course, they're paying a lot of money for those acquisitions. But there've been a few where they pulled away from, and I don't know, Tammy, if that's something to be concerned about. That maybe initially they just want to buy, or maybe it's a good thing that you actually see a concerted effort of them actually analyzing these things and actually realizing that some may not bring in the return that they initially thought they would.
Yeah, I think. For the third time in a row, I agree with Chantal. They are running like they're running a commodities hedge fund in essence. They are looking to buy up operations that they deem will be with leveraged finance that they deem will give them a balance sheet boost. And you can see that they recently pulled out of the US lithium play they went into, and it's part of that future play. We're trying to see what is out there and ride the next commodities wave. And as a result of that, they're going to take a hit. So if you have the stomach for the volatility and a positive long-term view on future commodities, then I think they're a good buy. In the interim, I think they need to really deal with their immediate issues around health and safety, around operational efficiency. They really have a lot of work to do around that. And I think if they get that right, they'll be fine. What will continue to be true about them is they'll continue to participate in what they deem is the next future of commodities, and they'll do that at a leveraged position.
Let's get to more of the questions. I guess really investors are trying to figure out what to do in these times of market turbulence. There is a question here: what are 5 key attributes to have to act or not at the moment? I don't know if there's a formula, Tammy, on operating in market turbulence other than just calm down. Call Batman and calm down.
Yeah, I think you're right. I think there must be some control, self-control or discipline over your emotions. Your portfolio may shift down temporarily. Secondly, the other side of this is that opportunities may arise. Price entries for good companies that you've been looking at historically but couldn't get into. Such circumstances provide those entry points. So it's a clear mind that's needed, and I think a ability to weather the storm without selling because something is 2% down. So I would say those are the key elements in this kind of environment.
Yeah. What do you apply to your mind, Chantal, during these times?
So I have there are a few sayings. The one is, if you panic, panic first. Unfortunately, you never panic first. So there's just no point. So don't panic. Just stay calm. The second thing is stay with your investment strategy or your investment plan, because you've kind of developed this thing for the long term, and now you just need to stick to it. Then the third thing is, as Thamsanqa also said, you need to have the stomach to take advantage of opportunities during this time. It's very difficult sometimes to see something go down 20% and then you loved it 20% ago and you were miffed because you missed the initial rally and now suddenly you're scared to actually buy the stock. You need to take advantage of these opportunities. Importantly, you need to have powder dry to take advantage of these opportunities. So you need to have some cash, maybe get some cash out of your fixed interest investments like your money market fund. And then the last and final thing comes from Wayne McCurry, and he always said when we had big sell-offs, the market has gone through all manner of wars and plagues and everything that can possibly go wrong. It goes down, but it always recovers. So you just need to keep that in mind. I've got his voice in my head.
Yeah, you must tell him that we miss him.
Yeah, he must come back.
All right, well, let's get to more questions. There is a question on Brait. Is it a good buy? Viewer says it's trading at around 2 rand. I know we don't have graphs, and our viewers have actually been complaining about this. We are working on bringing them back, so hopefully that can be done sooner rather than later. Tammy, Brait, yeah, trading at 1.92 rand.
Yeah, so Brait is in essence, again, a sort of listed private equity firm, right? So you have to look at the valuation of the underlying assets. And if you can't ascertain that, then there might be a struggle there. But you must make sure you can understand the valuation of the assets they own. Brait came from very, very high highs. Where it's at now is a shell of what it was. But it's something to be said when Dr. Christo Wiese it continues to buy and buy and buy. Maybe there's something afoot there, especially around the exit of Virgin. I think there's talk around the exit of Virgin. So Virgin Gyms. So I think my view is if you don't understand private market valuations, I think stay away from a stock like Brait. If you do understand it and you deem it to be undervalued, then I think it's a good business to buy.
Yeah, it's quite interesting because we have been hearing about the potential separate listing of Virgin Active for, I think, the last 2 years at least. But also then we had was it Ethos that let go of its stake in Brait, Chantal. So yeah, what does it say about the future of Brait?
So the future of Brait is Brait wants to wind up the structure. We know that. They actually don't want this thing to exist anymore. But now they have to pay down their debt and they have to get rid of the assets. So the first move was to actually list Premier Group. And that was a very successful listing. It's a very strong business. They still have a big stake in it and it continues to generate cash flow for them. And you can actually now see the value of Premier within the Brait stable. The second step, I think, will have to be the unbundling and listing of Virgin Active. You say 2 or 3 years. I was a young analyst and I did a full valuation and write-up on Virgin Active. It was coming to market and then they pulled the offer. This is probably, it could be up to 10 years ago when Virgin Active was first thinking about listing. So it's been in the works for a very long time. COVID-19, I think, derailed that because it decimated profitability in Virgin Active. And you want to list something sexy, otherwise you're not going to get the valuation that you want. So that's the next step. And then I don't really understand what's going on with New Look. The balance sheet is a complete mess. There are some convertible and exchangeable bonds in there that they need to sort out and figure out as well. So Brait is not for me. Again, I don't like stuff like that. But it's trading at a big discount to its underlying value, to its net asset value. So I think there's an opportunity there. Dr. Wiese has a lot of money. The money that he's spending on Brait is not a big part of his portfolio. So I wouldn't bet the house. He's not betting the house either.
Okay, all right. I hear that. Well, let's take a look at HCI. Yeah, I don't know. This is one that I don't really follow closely. I think I only followed closely when they like these huge swings in the share price, and it's because something's happening. With one of their holdings. Please ask your panel whether they have any insight into the 25% drop in the share price of HCI over 6 months. I think I do remember something happening. I just can't remember exactly what happened with HCI months ago when it had a huge drop in the share price, but seeming that momentum has continued. Tammy?
Yeah, so in reality, what they are is a BE investment holding company. So they have a lot of diversified equity, and again, they fall into the bracket of Brait per se, in the sense that you have to understand the underlying businesses and how they are valued.
Yeah.
They have a lot. They've got a lot of energy related stocks,
Yes.
which is something significant. I know they've got PGMs in there, some oil and gas companies as well, but it comes down to a view of the value of the assets they hold. And once you understand that, I think then the pricing will happen. There'll always be an NAV gap with companies of this sort, especially around private valuations. So my view is you need to, again, same advice with Brait, you need to really understand the valuations of the underlying, and then view those in reference to the stock value. Sometimes that gap never closes. Process and Naspers have been trying to close that gap for years.
Yeah.
So it's that valuation gap doesn't close, and you can get stuck in a valuation trap.
Yeah.
So I think it's important to state that you need to understand valuation. When you're looking at investing in holding company, understand valuation, understand the companies it owns, and if you can arrive at a reasonable number, and then compare that number to the stock price, and if there's a significant enough discount, then you can enter.
Yeah. Well, I remember this thing that I was talking about was to do with Impact Oil and Gas, that they have a 49% stake in, and actually was more than a year ago. Chantal, your take on HCI?
Yeah, so I'm not too close to the company. One of the analysts in my team actually looked at it, I think, towards the middle of last year, and her heading was, "It's just not that cheap." So that's the best I can give you. What I can tell you is oil and gas, oil prices have been under pressure and gas prices have been under pressure. PGM exposure, PGM prices have been under pressure.
Yeah.
The last 6 months, well, not the last 6 months, let's say the last 3 months or so, we saw Southern Sun, which is also a big holding of theirs, come under a bit of pressure or for very high highs towards the end of last year. So that can also explain part of the share price reaction. But yeah, I mean, 6 months ago, our thoughts were, it's just not that cheap. I'm not sure if it's cheap now.
All right. Well, what are you sure about? Let's get to your stock picks. Tammy, what are you choosing?
Oh, my stock pick is Stadio. 800,000 kids write matric, 400,000 of them have bachelor degree passes, only 200,000 of them get places in university. So there's a very, very large market to be addressed by Stadio. So Stadio is my stock pick.
And it was a shame they released a trading statement on the same day that Curro came out with the results, and I saw that their share price was under pressure, even though they said that their earnings would improve. So maybe just trading in sympathy there. So we'll see what they produce in their results. Chantal, your stock pick for today?
Yes, so I mean, we've been talking about these private equity companies, and it's actually a private equity company. So my pick today is Remgro. Now, I'm not a long-term holder of Remgro, but at times the stock is just mispriced. So currently it's trading at an almost 50% discount to its net asset value. And if you look at the companies within it that have now released results in this results cycle, Rainbow today, absolutely fantastic. RCL trading statement was absolutely fantastic. First round results were really good. Outsurance results were really good. Discovery trading updates and results was really good. So I'm thinking that there's a mispricing here. I'm thinking that the market has not given Remgro the credit that is due, given what the underlying companies have done. And then added to that, just in Heineken's results, they mentioned how strong their performance has been in the South African market recently. Remgro also owns a sizable stake in Heineken SA. The only thing that I think can really derail this is Community Investment Holdings, which is a fiber business that's been running some losses. Hopefully we can get some information around a potential long way to tie up with Vodacom soon. That could be the catalyst for Remgro, but I just think the stock is just mispriced at the moment.
All right. Well, thank you so much for your time, Chantal and Tammy. Really, really appreciate your analysis today. Yeah, thanks to my guests, Chantal Marx from FNB Wealth and Investments and Thamsanqa Netha from Shiloh Capital. Do remember that Stockwatch is pre-recorded on Mondays and Wednesdays at 1 p.m. So do send your questions beforehand, and is live at 6:30 p.m. on a Tuesday and Thursday. While Stockwatch this week is live at 12:30 p.m. on Fridays. We'll keep on reminding you about these times because it's easy to forget. But do keep sending your questions. We'll get to them. For now, that is all from Stockwatch this week. But do stay tuned for lots more coming up right here on Business Day TV.